Meta now notching another name in its expensive hunt for AI talent, poaching a top Apple executive for reportedly tens of millions of dollars. But is the spending starting to stack up? Deirdre Bosa digs into that for today's Tech Check. Hi, Dee.
Hey guys, good morning. So Wells Fargo calls it Zuckerberg's Steinbrenner moment. Of course, that's a reference to the Yankees owner who famously spent whatever it took to win, signing the biggest names, writing blank checks, daring anyone to outbid him. Now, that is what Zuckerberg is doing in AI right now. He's not just buying GPUs, but people. And the latest comes from Apple. His name is Roming Peng, the researcher who came from Google before then. He led a 100-person team that builds LLMs powering Apple Intelligence. Now, you could call this a pull from the minor leagues. Apple wasn't exactly seen as a hotbed for talent, but Zuckerberg saw something that the rest of the field did not. The rest of the league overlooked, and he paid up. A source tells me that Peng was probably the top guy at Apple, though not a household name. However, spending big doesn't always guarantee wins. Talent without cohesion can quickly become chaos, and Zuckerberg has brought in a lot of big personalities, the highest profile of which there's Alexander Wang, Nat Friedman, Daniel Gross. They come from the product side, not academia. But inside Meta's new superintelligence unit, they now outrank some of the most decorated names in AI. 28-year-old Wang, for example, he sits on par or possibly even above Yan LeCun. He is a founding father of deep learning and Meta's longtime chief AI scientist. The question now, though, isn't whether Zuckerberg can outspend the field. It's whether Meta still knows what it's building and why. Because the costs, they are piling up. Meta is earmarking capex of more than $70 billion this year as a percentage of revenue. That is a growth rate far outpacing even the hyperscalers, who have huge enterprise cloud businesses. Wall Street is estimating new AI hires at anywhere between $1 billion and $4 billion. Needham notes that Meta's stock-based compensation, it has tripled, and it's now nearly 3 times the big tech average. When you adjust for that, free cash flow per employee drops 30%. So in other words, guys, labor productivity, it's shrinking fast as Zuckerberg continues his hunt for talent. So investors, they might start asking, is this strategy or is it second system effect? That's a pattern where after a successful first build, teams overreach on the next. They add too much, they try to solve everything, and they end up losing the focus that made the original work. So that may be where Meta is now after success with Llama's open source momentum. Zuck is really just throwing everything at the wall. Still to be determined whether there is strategy, whether this will all come together, guys.
It's interesting, Dee. I was thinking, they're sometimes known in the past, Meta, for not quite matching their, say, CapEx guidance over the course of a year, coming in a bit under. I'm not sure that might happen this time.
Right, and it's, unclear whether $1 billion to $4 billion in talent is included in total costs this year. So the costs keep rising, and I think, the question, Mark Zuckerberg has been so disciplined, arguably one of the most disciplined big tech CEOs of the last few years, right? His drive for efficiency, his years-long efforts to be more efficient. Was that discipline? Does it allow for all of this spending, or is he losing the discipline that investors have rewarded so generously over the last few years?
And I was just going to say, Deirdre, I mean, what do you think investors are going to be expecting as far as timeline, the return on investment for some of these really big hires? These are not small salary numbers that are being reported here. If I'm an investor, right, I want to know that hire was well worth that.
I mean, you're getting at this sort of core tension in the AI arms race, right? ROI, return on investment. That is sort of what made the trade stumble earlier this year. If investors start asking for that again, where is the ROI? That's going to be difficult for Mark Zuckerberg to show, right? Because these models and AI that Meta is developing powers the core product, but it's not like a hyperscaler, right? Where they can pitch it and sell it to enterprise customers. It's a little more complicated than that. So you do have to wonder when investors are going to look for that return. However, this is AI. We know that it can be bubbly. We know that there's a lot of patience. This is not the metaverse, so they may be more forgiving.
Yeah, still a lot of enthusiasm. Wells today goes to 783 on their target for Meta. We'll see. There's a lot still to come.